Morning, Steve here in Chicago with the morning grain comments. Rains across parts of the western Midwest today, kind of leaking into the center part of the Midwest over the next couple of days, continues to offer resistance to prices. Beans down about 4 cents, corn down 4, and wheat down about 5 cents. Dollars higher, crude's lower, and most commodities are lower. USDA rated the corn crop 62% good to excellent. That's up 2 percentage points from last week. Last year it was 74% good to excellent. We have one crop analyst that still thinks that the final U.S. corn yield will be closer to 163.5 versus USDA's 169.5. In the beans, they estimated the crop at 59% good to excellent. Last week it was 60, last year was 72, and that same analyst estimates the soybean yield at 46.5 versus USDA's 49.4. USDA NASS continues to try to come out with clarification on why maybe their yields were higher than what the trade was looking for. The number one response is they were focusing a lot on the farmer survey. It's interesting when you read some of the blogs coming out after that report that they were wondering, if a farmer was hedged and he's part of the survey, would he come in with a high number that would allow him to make some money on that hedge? Again, USDA has no way of knowing if that's possible or not. The Midwest should see some rains over the next couple of days. 7-day rains, especially focused on Minnesota, Nebraska, and Iowa. 6 to 10, and the 8 to 14 day is warm and wet. 11 to 16 day GFS model looks for rainfall to be below average for most of the Midwest. European average is close to normal rates. I asked yesterday our weather guy as to two things. Number one, what kind of fall can we look forward to? And he said it's going to be colder than normal. The other thing about South America, any issues down there for 2018, he said he really doesn't see anything right now that would be a problem for next year's South American crops. It's interesting that while the U.S. farmer is not selling corn here, the Brazilian farmer is not selling corn down there either, and both have a lot to sell. People that have been down there says right now the farmer isn't interested in selling corn and don't really know how long he can hold out. But their prices yesterday went to the farmer to about $1.40 per bushel. As far as soybeans are concerned, it feels like here in the U.S. we've got not a lot of beans into the pipeline to finish demand before harvest. We got a crush data today that should show July crush near 145 million bushels. June was 138, and last year was 144. Funds yesterday sold beans, meal, and oil, bought some corn and wheat. It's kind of the wrong time of the year to sustain a rally into harvest, but we'll just kind of see as the debate continues on the final U.S. crop. It doesn't seem like, even if the crop is a little smaller, it's enough to rally prices until after harvest. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and a profitable trading day.